Prime Minister.
The federal government has rewritten what's known as the Stage 3 tax cuts.
From the 1st of July, Australians earning more than $45,000 a year will receive a tax cut.
Our tax debates happen in Canberra.
Middle Australia are the big beneficiaries of our tax package.
Isn't every Australian worse off as a result of your broken promises?
But changes this year have exposed real pain in the office of this Lismore accountant.
It's pretty hard to deal with people that start crying in front of you. You can't help them.
Sharnette Joseph's clients are upset about the removal of a rebate, the low and middle income tax offset known as the Lamington. She says in 2022, a person on $45,000 a year got $1,275 back. And under the new Stage 3 tax cuts, they'll save about $800. The rebate also helped many low-income earners pay for big one-off items like car registration.
I had to deal with people bursting out in tears, being really pissed off, not being able to pay my fees because now they don't get a refund.
It also demonstrates how hard it is to change the tax system in Australia. We don't pay a lot of tax in Australia compared to similar nations and compared to the amount that we create in the economy. But much of it is income tax, and the percentage of our tax take that's from income is among the highest in the world.
We've kind of got an Aldi tax system designed to fund like a Coles or Woolies budget.
Experts say substantial change will be inevitable because squeezing income earners more won't work.
The problem will only get bigger because we'll have less workers as a proportion of the population as the population ages.
Already, workers are feeling the impact of bracket creep, where rising wages pushes people into higher tax brackets.
Over the last couple of years, rising tax payments by Australian taxpayers have been a bigger drag on household income than rising mortgage payments.
At the same time, the tax system has elements like negative gearing, which compensates landowners who lose money and incentivises people to become property investors.
Tax dictates how you invest, and we encourage people to invest in non-productive assets.
We tax wealth very lightly compared to other forms of income like wages. You know, thinking about the capital gains tax discount, the concessions in superannuation.
Multiple reviews have recommended big changes, but at the moment there's little political appetite.
It gets outsized media coverage, often focused on the losers, which ignores the bigger picture of the fact that it's in the national interest, that the majority of people will be better off.
The Grattan Institute says with a structural budget deficit of about $50 billion a year, we can't continue to ignore the problem.
Tax is the price to live in a civilised society. We've probably not had governments in the last 15 to 20 years that have been upfront about the trade-offs that this involves.
With increasing demands from an ageing population, it's a conversation we won't be able to put off for long.